Are you an established small business owner or aspiring entrepreneur? Would you like professional advice to help your business grow and succeed? Well, look no further. The Virgin Islands Small Business Development Center is the territory's #1 resource to move your business forward. Enjoy no-cost advising, low-cost training, and technical assistance from experts in both the public and private sectors. The VI-SBDC is nationally accredited and sustained by the University of the Virgin Islands and the U.S. Small Business Administration. Visit us at our locations on St. Thomas, St. John, or St. Croix, and follow us on social media at VI-SBDC. For easy access to all our training and networking events, be sure to join our newsletter and download the VI-SBDC app. The Virgin Islands Small Business Development Center, here to help your business start, grow, and succeed.
Good morning, everyone. Thank you for joining us for today's session, Island Economics, Mastering Cash Flow in the USVI. In the US Virgin Islands, we often talk about resilience in terms of storms and infrastructure, but for a small business, resilience is measured by liquidity. Between seasonal fluctuations, shipping delays, and the unique cost of doing business in the territory, managing your cash isn't just an accounting task, it's a survival skill. My name is Sharika Industrious Phillips. I am the Network Marketing Coordinator here at the VI-SBDC. And to guide us through this, I'm honored to introduce VI-SBDC Business Advisor, Mr. Daryl Edwards. Daryl Edwards is the managing member of Straight Path Consulting LLC, a St. Thomas-based firm established in 2011. With over 2 decades of experience, he has been a cornerstone for local business development, serving as a longtime counselor and consultant for the VI-SBDC. Beyond consulting, Daryl is a dedicated educator at the University of the Virgin Islands, where he has taught small business management and introduction to business since 2008. His expertise is backed by a powerhouse academic background from UVI, holding degrees in business, computer information system, accounting, and a master's in business administration, along with a certificate in personal financial planning from Florida State University. Here's a friendly reminder to place your questions in the chat, and they will be addressed by the presenting team either directly in the chat or later during our question and answer segment. A copy of today's presentation will be attached to the post-survey email sent after this live session. We encourage you to take a few minutes of your time to briefly fill out the survey that lets us know how we're doing. This data is essential to us rendering these deliverables complimentary to you. So, Mr. Edwards, thank you for being here to help us navigate the math behind our business climate. The floor is yours.
Good morning, everyone. I trust and hope that everyone is doing well. So please make a note of this, that I want you guys to do some work as well. So I want to make sure that you have something that you can calculate numbers with. You can use your phone, you could use a computer, you could use a calculator. Anything that you could calculate with. I got to make I do some work today. I believe that you learn by doing. Yes, you could listen to me, bang my mouth, as the saying goes, but I think you actually learn when you actually put your hands in the dough, as they say. I could give you the recipe to make the cake, but I want you to also feel how it feels to knead the dough. Okay, so please make it available right now. We're not going to get into the calculations until later, but still, please make it available. So, we're dealing with straight cash, homie. This will be another subtitle of this presentation. We're dealing with cash flow. And in business, please know that cash is king. I know many business owners have great intentions. Some people tell me, well, Edwards, I ain't into this thing just for the money, I want to help my community. And all of that is well and good. I'm not doubting the intentions. But if your cash flow isn't set, even if you have good intentions, you're still not going to be able to do it. You're not going to be able to survive without a positive cash flow. So let's take a look at some of these definitions. Cash flow, of course, is you can say it's money coming in and money going out. If it's positive, that means that more money is coming in than what leaves. And of course, if it's negative, it's the opposite. Keep in mind that positive cash flow is not the same as profit. In an ideal world, they will be the same, but there is some difference between them. And if we have time, we'll discuss it. But I do have some slides towards the end of this presentation that outlines these differences. And if we have time, we'll get to those slides. If not, but they would be included in what you receive. So you'll see the actual difference between the positive cash flow and profit. Now, looking at strategies to manage cash flow. The first thing you need to do, and I know some of you who are in business will say, oh, shucks, I should have known this before. But before you open your business, you need to establish what we call operating cash. Some people mistakenly call this working capital. Even banks have mistakenly called this working capital. Just know that working capital is kind of similar to operating cash. It's a very technical difference, but just know that working capital involves items that are not cash. Okay, so we wouldn't really get too deep into that right now, but just know that there's a difference between working capital and operating cash. In fact, one time I attended this seminar when I was working with the SBDC full-time. I attended a seminar, and it was conducted by a Virgin Islander who was born here, but he went to the States. And what he does is he trains bankers. So there were a lot of bankers at this seminar, including some of our local bankers, Banco Popular, at the time Scotia, and stuff like that. And we were trying to explain to him about what we call working capital. And he's saying working capital. He's trying to, understand what we're saying. And then finally we explained it to him in detail. He said, oh, what you guys are talking about is operating cash. Okay, so before your business begins, you need to have operating cash. You need to include that in your startup expenses. When you're itemizing your expenses of what you need to start your business, operating cash has to be one of those items. And usually the amount of operating cash is based on your, at this point, you're going to be a startup, so your projected overhead expenses, such as payroll, rent, utilities, or loans. For example, you might say, okay, I want to make sure I have 2 months worth of rent and 3 months worth of payroll before I open the business. Now, I know for some people that would really delay their opening because sometimes that might be a significant amount of money and they may not be ready to do that. But like I said, this is my recommendation to you because with many businesses, when you open, especially retail businesses that sell products, a lot of time you're not going to generate a lot of sales right away. It's going to take you some time to really generate sales. In fact, they say many businesses lose money the first 2 years. So if you're going to lose money for a certain time, you need to have backup cash. And that's where the operating cash comes in. So even if you don't generate a lot of sales in the first couple of months, you have 2 months worth of rent set aside, or 3 months worth of payroll set aside. So you could meet these obligations, okay? I usually recommend at least 2 months. Some people think they could get away with 1 month. Especially for startup, at least 1 month. Project your payroll, project your rent, and whatever fixed costs you have, and multiply it times 2 or 3, at least 2. Okay. And please, as you open a business, you only utilize this operating cash when you need to use it. Okay. A question to you guys, and I don't know the answer to this because I never really looked into it. Are there dual accounts for businesses in the VI? I have dual accounts for my personal account. I think I have maybe 1 or 2 of them, where they have a combination of checking and savings. The reason I'm asking this question is, If they have those dual accounts for businesses, you could have one account, one side is checking, the other side is savings. You only get interest on the savings portion. If those are available for business, please let us know, because that would be a good thing. What you would do is you would put the operating cash in the savings part, and all the rest of the expenses would go in the checking part, if that's available. I haven't looked into that. And of course, to properly calculate the amount of operating cash needed, your financial projections before you open a business is very important. We're going to take a look at a sample. This is a startup page of a financial projection. This is a fictitious business of mine, Daryl's Gift Shop. So you can see the different items I'm going to spend on. I'm going to go for a loan because the total to be financed. So I will go for a loan. Right now, the loan is at $80,125, but I purposely left out the operating cash. Because what I want you guys to do is, I'm going to take a look at your assignment and then we'll get back to this slide. Look at my startup page, so to speak, and calculate how much operating cash you think I should have. The two items for this example are, you could say, the rent and the payroll. What you have to do first is calculate the monthly expenses for these two items. And the total startup cost should be rounded to the nearest thousands of dollars. That's what banks would prefer. See, like I have the numbers 80125, they would say, no, either make it 81 or make it 80. They like you to round it to the nearest thousand. So whatever your answer is, it should be to the nearest thousand. So go ahead, look at the payroll. Remember, the payroll is for 2 weeks. I need payroll for 2 weeks because 2 weeks before I open, I'm going to meet with my staff and we're going to have training and, get them familiarized, training, orientation, and all that stuff, and I'm going to pay them. So this is going to be for 2 weeks. So calculate how much this would be for a month. And then you could look at the deposit on the lease. I have the first and the last. So you could calculate how much that is per month. And then tell me how much operating cash I should need. I'll give you guys some time to do that. So you look at these two items, you look at the payroll, and you look at the rent, so to speak. I made a deposit for $8,000, which is first and last, so you should be able to figure out how much it is per month. I'll give you guys a little bit of time to do that. And you could either unmute yourself or put it in the chat. The answer. How much operating cash would you recommend for me? It looks like we have one answer. 142. Oh, 1425. Okay, this wasn't but 14,250. 14,250. This other person put down 37,000. Okay, I should have told you to also explain your answers. Explain how you came up with these numbers. 14,250 and 37,000. Let's give a brief explanation. You could say, well, okay, I did X amount of months. I know the rent is X amount per month, so I did X amount of months, and I did the payroll at whatever. So just give us a little explanation as how you came up with those numbers. This person put 13,500. based on okay. Okay, so this person said, okay, this is an explanation. The payroll needs to be doubled. So if you double the payroll, that would be for 1 month. Because remember, the payroll is for 2 weeks, right? So if you multiply this 3,125 times 2, that will give you the amount for the month. So if you double that, okay, so that's how you came up with that. Okay. And by the way, there's really no right or wrong answers, just a matter of perspective. So I don't want you guys to think that I'm going to say, no, it's wrong. No, it's a matter of your perspective. Okay. Just waiting for some explanations. Well, I got one explanation. I need at least 2 more. Right, 8,000 for 2 months. Right, yes, exactly. 8,000 for 2 months. Okay, I see what you did. Somebody put 107,750. I think they mean that should be the total. But we're looking just for this line for operating cash. That's what we're looking for. But I don't think you're suggesting I have 107,750 for operating cash. There'll be a lot of operating cash. I think this is what the proposed total should be. Okay, let me see. 1,250 payroll for 2 months. Okay, I got you. So that's basically one of the things that I recommend that people do before you open the business. Now, those of you who are already in business are saying, man, I already start my business. So there's still some things that you can do. You still can develop this operating cash and all these other things. So we'll move on. Establish a business bank account. That should be like a duh, but you'll be surprised. Some of my clients have not opened. Okay, this one is giving me an explanation as to how they came up with the 37,000. Double the payroll, okay, and double the rent. Okay, good. So yeah, a lot of my clients have not established a business banking account. You want to keep your money separate. You want to keep the money from your business separate from your personal money. You can't have everything mixed up together. And it's easy to monitor your business cash flow. Please get the option to monitor your business bank account online. When I first opened my business bank account, I noticed they were taking $10 out per month. And so maybe they explained it to me, but I don't remember them explaining to me. Then finally they told me it's because I have the internet access to monitor the account. They say if you don't use it, they would stop taking out the $10. But if you have a very active business, okay, another explanation. If you have a very active business, I recommend that you keep this option so you could monitor your cash in your business account at any time. My business is not really that active, so I took off the internet access. If I want to know the balance of my account, I just do the old-fashioned way. I just call up. And it's rarely that I really have to check the balance on my account. So, but again, if you have a very active business with a lot of cash coming in and going out, please get the option to monitor it online because it's only $10. Your business bank account should have check writing capabilities in case you need to write a check to somebody. And you need to learn how to reconcile your account, meaning that if you have a check that you wrote, but it isn't cashed as yet, you need to add that or subtract it rather from your current cash. Okay? If you know you have 10,000 in the bank and you wrote a check to somebody for 2,500, even though if you monitor online, it's not going to show, it's still showing the 10,000. You need to log all the checks that you written and say, okay, even though it's saying 10,000, it's really 7,500. Obtain a business credit card, if possible, because it provides information for you to prepare your financial statements. And you can make a lot of your payments with your credit card as well. And again, it does separate, business from personal. So I'm going to ask you guys a question now. How could a business have a lot of money in its business bank account? It could be millions. It could be billions. It could be trillions. I don't know what comes after trillion. What comes after trillion? Quadrillions? I don't know. It could be a whole bunch of money in the bank, and yet the business could be considered poorly functioning. How could this be? You could have a lot of money in the business, and yet the business is poorly functioning. Million, trillion, multi-trillion. I don't know what's after trillion. I have no idea. I can't count that high. So how could this be? You have all of this money in the bank, and yet your business could be considered poorly functioning. How? Gave you the answer too quick. They're not managing the financial portion properly, like paying bills on time, poor accounting practices, lack of investing, allocation. I think you guys are on the right track. Basically, it's the source of the money. Yes, you can have a lot of money in the bank, but how did it get there? How did it get there? Because the money could have come from the owner. Maybe the business did not generate the money. The money could have come from the owner. I have a lot of clients who have multiple businesses. And I know in some cases, sometimes they use one business to finance the other business. But if your accounting is proper, like what somebody mentioned, if your accounting is proper, you would say, yes, 25,000 was donated to the business, but it came from this other source. The business did not generate that 25,000. So that's very important. How did the money, leaving it sit not necessarily, yeah. It depends on the source. Like I say, you have to identify if your financial statements are correctly generated, it's going to indicate the source of that money. It's not going to say it come from sales, because that didn't come from sales. That came because the owner or maybe a rich uncle or somebody decided to give you 25,000. And that's very important to distinguish. And that's one of the reasons why profit is different from cash, because that's not going to show up in the income statement as profit. If your uncle give you 25,000, it's not going to show up in the income statement because that wasn't generated by the business. Okay. Another strategy is prepare and understand and monitor your financial statements, specifically your cash flow statement, your income statement, and your balance sheet. We're going to take a look at these in a second. When you're monitoring them, you're looking for potential problems and concerns, and you want to identify how you can increase the cash coming in and decrease the cash going out. And that should be a duh, of course. So let's look at some of these examples. If it doesn't show up well on the screen, I already have the source document open, so we could switch to that. But if you could see it, it looked like it's cut off, but it's not cut off. It has everything there. So this is the cash flow statement. So take a look at this. If you look at the column to the left, the pre-open column, I basically put 5,000 into this account, opening cash equity. This came from me as the owner. I put 5,000 into this business, and I got a loan for 50,000. So my total, I started off with cash as 55,000. And then this shows what I did with this 55,000. All of these, I put some into inventory, made some improvements, insurance, etc., etc. So the total disbursement was 45. So if you subtract the 45 from the 55, you have 10. So this is my 10. To go into the business, so to speak, I come in with 10. And this is all the money I'm making, sales, etc. We're not going to go through every single, but I just want you to understand that that's what that is. But my final cash balance is 19. So it depends on how you look at it. You could look at it, say I started with 55, but you could say that I started with 10, because going into the business, I started with 10 and I ended up with 19. So those are things you want to look at in your financial statements. How much you started off with, how much you have at the end of the period. In this case, the end of the year. This is my first year. This is last year, 2025. This is an income statement. It's from January 1 to December 31st. The top line is sales or revenues. And by the way, sales and revenues can be used interchangeably. What I learned as an accounting student, on the first day of class, we learned that sales usually apply to if you're selling products, and revenues apply if you're providing a service. But I've seen them used interchangeably. So you could use sales or revenue. Okay, so the sales is 220,000. The cost of goods sold is the cost of those items that I sold. Out of all of those items that I sold to generate that 220,000 for the year, those items cost $68,040. So my gross profit, you subtract the 68 from the 220 and you get the gross profit. Then you have the operating expenses, which total up to 145. So my operating income is 6. Depreciation, you add it back. Depreciation is not a cash. Depreciation is just the assets of the business being depreciated. It's not, you don't have to spend cash on depreciation. That's why it's not in the cash flow statement. And then, of course, I have a loan, so I have to subtract the principal payment. So my net income for my first year is only 1,817. I did not pay myself. I paid my employees, but there's no line for the payroll for the owner. So my payment would be 1,817 for the entire year. Not that impressive. And this is the balance sheet. I know it looks kind of shriveled up. But this shows the assets and liabilities. And it shows that 1817 is gone back there again. So the things you want to focus on when you look at your financial statements, if you're selling products, you have to look at the relationship between the sales or the revenues and the cost of goods sold. We're going to show you about the gross profit margin. So if you go back, the sales is 220 and the cost of goods sold is 68. So one of the things that you're going to look at is what we call the gross profit margin, and it measures the percentage of the sales that is retained as profit after covering the cost of goods sold. And this gross profit margin, this is a very important calculation. You think of the gross profit margin as, and we covered this in the seminar that we had, or the webinar that we had last week, the one on pricing, but it still applies to cash flow as well. So you think of the gross profit margin as the amount of money you keep for every dollar you generate. If it comes up to 70%, this means that for every dollar you generate, you keep 70 cents. And 30% goes to direct costs. Okay. So go back again. My sales is 2, so write down this number, 220,000. And my cost of goods sold is 68,040. So what you want to do is plug those numbers into this. The sales, 220,000. The cost of goods sold, 68,040. Then you divide that, whatever you come up with, you divide that by the sales, the 220. Then you multiply it times 100. And what number did you guys get? We'll go back one more time. 220 is the sales. Cost of goods sold is $68,040. So you plug that into this number, this formula. 220 minus 68,040. Divide that number by the sales and multiply times 100. And what number did you guys come up with? Okay, we have one answer in the chat. 69. Okay. Any other answers? Oh, I think you did something. Okay, somebody says 69. Another person says 69. This other answer, oh no, remember the answer has to be a percentage. So that answer is the 219,000. That answer is not correct. Somebody said 30. We have two that has 69. Okay. So the answer is, you guys are correct. 6907. It's correct. 220. See somebody. Yeah, somebody else have the 69%. Yes. Yeah. So that means for every dollar that I earn, I'm keeping 69 cents. It's not that bad for a startup business, but somebody says 6. No, it's not 6. It's 69%. It's not bad for startup business, but again, I probably might have a goal to say I wanted to be at least in the 70s, 75 or whatever. So the only two ways to do this is to either you raise the price or you lower the cost. You find a way to get the cost of the items at a lower price, or you raise the price of the items. So again, this is information to help you make decisions. That's the purpose of information, to help you make decisions. Do I need to make a decision on this? Are my prices in line? And keep in mind, this is all of the products. So maybe I might have to raise the prices on some of the products. Again, use that for information purposes. The beginning cash, look at the beginning and ending cash. I began with 55 and ended with 19. Of course, you could argue and say that I began with 10. Because remember, if you go back to the cash flow statement, I did start out with 55, but I spent 45 on things that I needed to start the business. So instead of saying I started with 55, you could say I started with 10. I started with 10, and I ended up with 19,257. So it depends on your perspective. So that's one of the things you want to look at, how much you started with. Since we're speaking about cash, how much you started with. What are my largest expenses? I think my largest expenses are payroll. Payroll is 60,000, rent is 48. I don't necessarily want to reduce the staff. My staff wouldn't want to hear it. And that's a pretty small staff. So I may not be able to address these two issues. I don't know if I could tell a landlord, hey, give me a lower rent. I don't know if that's possible. 4,000 a month is not that high. So, but that's what that's the decisions you make. That's what you look at when you're reviewing. Look at the seasonality part, especially with the cash flow. That's the reason I like the cash flow to be monthly, because as you could see, the peak months, I earned 22,500. Of course, you guys who are in business know that you're not going to make the same amount every month. But and for the slower months, I make 12,500. So one of the questions I would have to ask myself is, how can I boost sales in the slower months? The slower months is almost half of what I make in the peak months. So again, all of this is part of the decision-making process. Use this information to make decisions. That's why you need to understand what you're looking at in the financial statements. Even if you don't prepare them, even if you have an accountant or bookkeeper that prepares them, please have them explain to you, what do these things mean? What does this mean? Okay? But this is your business. You need to know what these things mean. So, how much free cash do I have? Do I have any free cash? Remember, the cash at the end of the year is 19,257. But you have to remember, some of it might be obligated. I have loans to pay. I have salaries. I have rent. So how much free cash do I have? Do I have any free cash? So look at the payroll. The payroll is 5,000. So you put that aside, 5,000. The rent is 4,000. So you add that. You could put in the telephone as well. The telephone is 150. The electricity is 750. These are things you want to have set aside. You want to have money set aside to pay these items. When including the payroll, you have to look at the payroll taxes as well. So, and something that I saw as well, the insurance. If you notice that the insurance is 2,000 for the year, right? I paid that out of the money I got from the loan. But next year, which is this year, 2026, I have to pay that from, directly from my account. So I have to include that as well. So I don't know if you guys can calculate all of this. 4,000 plus 150 plus 750. I think I added the supplies as well. Plus, even though the supply is only $50, plus 50, plus the 5,000. You have to add the payroll taxes too, plus the 765. I added the vehicle expense as well. And I added the security. The promotion is not an overhead. You could do without the promotion. The overhead is things you can't do without. You have to pay those things. Some people might want to include the licensing as well. So, how much free cash do I have? Not much. It depends on the perspective. You take the rent, the payroll, the taxes, the security, the vehicle expense, supplies, the telephone, electricity. I included the loan payment. I included the interest on the principal, because that's something you have to pay. I included the insurance is an annual expense. So it's 13,658. Remember, my starting or my ending cash was 19,257. So if you say that 1 month worth of overhead is acceptable, then I have 5,599. Like I said, I don't think 1 month is acceptable. So I would say, Daryl, no, you don't have any free cash. You have to try to get at least double this amount. And I didn't even include the business license. So that'll be 14,658. So when you have anything over 28,000, then you could say you have free cash. Okay. And then I have to discipline myself. This 28,000 is not to be touched. That's why it's important. If you could have them in separate accounts, it would be great. So, you don't touch this account, you keep this for those overhead expenses. And then anything over that, you can touch. Somebody put something in the chat. And the gross receipts. Yes, you could consider the gross receipts as well. Yes, definitely the gross receipts. You want to develop goals for your operating cash. For example, you might start off with 2 months worth of payroll, and then you want to extend it to at least 4 months. I would say at least 3 should be. I know some people, especially when it comes to startup, to have that operating cash at startup is kind of rough, but I think it's really necessary because once you get into business, you're gonna have a lot of unexpected things happen, and you may not meet your sales might not have generated enough sales as you anticipated. So you need to have that operating cash to fall back on. Before you expand, make sure you have an optimum level of operating cash. It could be 3 months, it could be 6 months of all overhead expenses, depending on your perspective. Some businesses, 3 months, you could probably get away with it. Other expenses, 6 months. So in other words, before you expand, an expansion means you want to move to a larger location. You want to have a totally different, you want to expand to a different location. So you have more than one location. You want to hire additional staff. All of those are considered expansion. Make sure you use your free cash to do those things. Don't dip into your operating expenses to do an expansion. I know it takes discipline. It'll seem like, wow, I have 28,000 just sitting there. But I think it's wise to have it sitting there, then to dip into it, and then you realize that you're in trouble. If you're selling products, yeah, you want to seek terms from your suppliers. When you have terms, that means you can order products without paying them right away. The supplier would give you 30, 60, or 90 days to pay off your inventory. So that means you could get these products, you could make money from them, and then you have a month or 2 months or 3 months to repay. That gives you a good little cushion. However, usually this is developed over time. This relationship is developed over time. If you're just having a relationship, just starting a relationship with the supplier, they may not give you those terms. You have to earn you have to earn the trust. You have to see that you're making your payments on time and you're ordering a certain amount every month or whatever before you could get those types of terms. If you sell products, try to expand to a larger facility because this way you could order more inventory at a lower price. Usually with most of these suppliers, it's on a sliding scale, how much you pay per item. So if you order 5,000, the cost is going to be this amount. It might be $2 for 5, if you order 5,000. If you order 10,000 or more, it might drop down to 150. So this way you'll be able to order more. But of course, if you order 10,000, you need a place to store them. So yes, it's going to cost money and it's going to take time to establish it, but you want to establish a larger storage facility so you could store those items and you could order more. You might even get exclusive distributorship, which is something that you'd have to earn. This is a biggie. If you have receivables, that's money owed to the business. If you have receivables, you have to manage them. Of course, keep records and also develop a system of collection to include reminders. I had a client, right? I couldn't believe I couldn't believe what I was seeing with this client. And actually, it was his girlfriend was the one that actually came to me. And she was upset. She was the one who's doing his accounting. And she said she scheduled the appointment because he has a lot of receivables. A lot of people owe him money and they're not paying him. So I told her before she comes into the session, make sure you bring me a list of all his debtors, so to speak. All the people that owe him money. And when she came to me, she came with a handwritten list. It was handwritten, I don't know why she wrote it in hand. It was handwritten. It had like maybe close to 10 pages handwritten of the people that owed him money. And when I looked at the list, I was saying, wait a minute, wait a minute, wait a minute. This one business owed him $20,000. 20,000 is really not a lot of money in the grand scheme of things, but for a small business, 20,000 is critical. I know that business could have written him a check for 20,000 with the eyes closed, not even think about it. And another large business owed him 10,000. So I'm like, how did it get to the point? And one of the reasons why his girlfriend was really upset is because she said, as much as those companies owe him money, he's still doing business with them. He owed him 20,000 and he still continued to do business with them. So I said, girlfriend, we got to develop something. So one of the things that we did is we developed a system of collection. You have a collection and you basically have correspondence that you already have set up, and all you have to do is put in the name and the amount they owe. So the first correspondence will be very friendly and open. Hey, thank you for your business. This is to remind you that you owe us $20,000. And we appreciate if you could pay us, nice and friendly. The second letter would be a little more forceful to say, yo, what's up? What's up with this 20,000? And then the third letter would be, you know what it is. Straight cash, homie, straight cash. Okay. Third letter, my son, pay us the money. But you need to develop a system of collection. And why are you continuing to do business with people who owe you $20,000? It's going to be hard for you to figure, okay, this payment that they gave me, is this for this money or the work that I just did for them? Obviously, he does good work because people, he has a lot of clients. Like I said, it was like 10 pages handwritten of the people that owe him money. But you need to develop a system of getting your money. Like we said, straight cash homie. So it's actually a little past 11:45. So we're going to stop here and field any questions. Any questions that you guys have? Believe it or not, I used to have that much hair on my head as well. Times change.
All righty. Thank you for that, Mr. Edwards. If you don't want to place your question in the chat, you can unmute your mic and ask directly at this time.
Yes.
Okay, I guess we don't have any questions.
I see something in the chat.
Okay, so there is.
Can I briefly speak about sales and revenues? Also, what do you recommend for a small business startup with cash flow, etc.? Okay. Well, first question is about sales and revenues. I'm not sure what the question is about sales and revenues. But sales, as I said before, sales and revenue is basically the same thing. It's just that sales is supposed to be for businesses that sell products, and revenues are supposed to be for those that provide service. So it's basically interchangeable. In my situation, for my fictitious business, my sales is $220,000. I got this by generating 22.5 a month for the peak months and 12,500 for the slower months, and it comes up to 220,000. And you guys in business know that you're not going to get a straight line every month. So these seem more like projections than actual sales. Actual sales would not have the numbers so neat and nice. So I'm not sure what question that person had about sales and revenues. Maybe they could expand on that. And in turn, the second part of the question is, what do I recommend for your startup? When you start in a business, you must have operating cash. For this example, we left it out on purpose so you guys could calculate it. And as we said, the operating cash is usually based on a monthly figure of some of your projected fixed expenses. Because remember, at this point, you're not in business. You're about to go into business. So, and as we said for this example, the payroll, definitely that's an overhead. So you want to have a certain amount of payroll set aside. The same thing with the rent. So even if you don't generate a lot of sales in the beginning, as we said, it takes a while for business to generate sales, especially in retail. It takes a while, for your promotional activities to really bear fruit. It takes a while. So while you're waiting on that, you still have money set aside so that you can pay these obligations. I know some people, before I get to your other question, I'm going to say this. I remember one of my clients, she was working at the time and she wanted to quit her job and start a business, right? And I told her, and she wanted my blessing. She wanted me to say, yeah, quit your job, because she says she doesn't like the job and all of this stuff. I say, yeah, I understand you don't like the job, but right now it's paying the bills. Hopefully it's paying the bills. So you quit that job and you start a business, there's no guarantee that as soon as you quit that job, the money gonna start flowing in. So she was very persistent. She said, I need to quit this job. What are you going to do? What's your advice to me? So I said, okay, if you want my blessing, I'll give you my blessing to quit your job if you could provide this. Provide 6 months worth of, and it was a service business, so she didn't have much projected overhead expenses. I said, if you have 6 months worth of expenses set aside and 6 months of personal expenses set aside, I'll give you my blessing. I don't remember what she did, but I think she was taken a little aback at that. But you have to keep that in mind, because how are you going to pay yourself? You don't have a job. How are you going to pay yourself? So let me look at this other question in the chat. Can you explain the last exercise in a little more detail? Okay, the last exercise. Okay, the last exercise was this. I consider this the last exercise. Free cash. Free cash meaning that it's not tied to anything. Right now, these are my monthly expenses. And you're right, I didn't include the gross receipts and I didn't include the business license as well. I probably should have included those. Okay. So I have 19,257, but how much of it is free? How much of it is free? I have rent, I have payroll, I have all of these expenses. So this is 13,658. So if I determine that 1 month of these expenses is acceptable, which I don't recommend, I think you should have at least 2 months. If I think 1 month is acceptable, then you would say I have $5,599. I just subtracted the 1358 from the 19,257. This is the cash that I had at the end of the year. And I might be thinking of expanding. I want to expand. I'm thinking, should I expand? I would have to look at this. I have 19,257, hopefully in the bank. And these are expenses that I need to take care of. So technically I have 5,599. Could I expand with that amount of money? I don't know if you could do much expansion with that amount of money. So I would have to tell myself, wait a while, be patient, wait, you don't have enough. So I hope you understood that. If there's any particular question or specific question you want me to address with this, let me know. I hope I've addressed it. If I haven't, let me know. Discuss negative cash flow. Negative cash flow, that's simple, right? Remember, you have cash coming in and you have cash leaving. If more cash leaves than what comes in, that's negative cash flow. And sometimes negative cash flow is expressed in what you owe because you can't meet the obligation, so you're going to have to probably owe people. It's not that you have negative cash, not that you have minus X amount of dollars in the bank. It probably means an obligation, probably is going to turn into a liability, something that you owe. Additional questions? We didn't get into the difference between profit and cash, but it's going to be on this presentation. What you will get, you get a PDF version of this presentation, and you can take a look at it. And if you need assistance with anything, that's what we're here for, the SBDC. So you can contact me through the SBDC. It's better to contact the SBDC directly, because if you contact me, I'm still going to try to route you through the SBDC. It's better to contact the SBDC directly. So is there any additional questions?
Having none, thank you so much for
Okay,
your presentation.
great.
All righty, so that leads me to say the VI SBDC has so much more in store for USVI small businesses. You can visit our website at www.visbdc.org. Follow us on Facebook, Instagram, Twitter, and subscribe to the VI SBDC YouTube channel. We encourage you to download our complimentary app from the App Store. And I am going to highlight a few of our upcoming trainings by going to our website just to show persons how to navigate. Okay, so here it is. So this is the SBDC website, and we want you to pay attention to training and select events so that you can be able to register for events that we have coming up. This is our in-person event we have coming up in May, and it's going to be on both university campuses. It's focused on government contracting, and we encourage persons to go ahead and register. Let me take you in terms of what events we have coming up. So I do want to say that this webinar will be transformed into an on-demand format. And how do you get to the pre-recorded sessions? On this page, make sure to select on-demand. We want to make sure center says all, and when you hit search, it will appear here. So our first session with regards to Financial Literacy Month, the SBDC advisor, Darrell Edwards, presented on this as well. And so it's available if you want to see it at your leisure. So let's go back to what's to come. I'm going to search. And so we had to postpone this session. That's going to be tomorrow. It was Merchants Commercial Bank speaking to small business accounting 101. And as soon as we secure a new date, we'll send out a conference announcement to let persons know the new date and time. Coming up on April 13th, we have Popular, and they're going to be presenting capital and credit, positioning your business for local financing. So that's going to be April 13th, beginning at 11 a.m. Atlantic Standard Time. We have SBA Senior Area Manager Wayne Huddleston. He's coming on April 14th. He's doing the 5 C's of SBA loan eligibility. On April 15th, we have the USVI EDA, and we have Ms. Charmaine Brooks as well as Ms. Monique Samuel, and they're going to be presenting Navigating Capital, a deep dive into USVI EDA funding and the SSBCI program. On April 16th, we have Merchants Commercial Bank, and they're going to be presenting on mastering business finance with regards to loans, banks, and beyond. On April 17th, we have SBA Senior Area Manager Wayne Huddleston. He returns to present on SBA Federal Contracting Certifications. This session had an earlier date, and we did have to push it back and change the date. But you will receive a notification to register for this. On April 21st, we want businesses to start looking at disaster preparedness. So SBA Senior Area Manager Wayne Huddleston will be hosting that session on the 21st, beginning at 10 a.m. Our SBA sessions usually start at 10 a.m. And then to close off Financial Literacy Month, we have Mr. Edwards returning, making sure that everyone is prepared with a business plan. So that would be Blueprint for Success, a practical guide to writing a business plan. And we will continue to place events on the training portal as they become available for you to register. So let me go back and see if we have any more questions. Thank you for another informative session. Have a pleasant day ahead. Some things to consider moving forward. Okay. So I received that this was helpful. And so compliments of the entire VISBDC and our state director, Ms. Karen Jones. We want to tell everyone we appreciate your attendance and we wish you a productive rest of the day. Take care, everyone.
All right.